Hey everyone, this is Caleb Franzen with Cubic Analytics. It is Monday, June 27th, around 1 p.m. Eastern Time, and I wanted to put together today's video to essentially discuss and highlight some of the different dynamics that I'm seeing in risk assets. And so most of this conversation is really going to revolve around different things that I'm seeing in the stock market, and then really switching and focusing specifically on Bitcoin. But in this environment, we certainly cannot talk about Bitcoin without looking at how other risk assets are performing and potential signals that we might be able to glean from the broader equity markets. And there's always a lot of discussion, especially lately in this year, about how stocks and Bitcoin are very correlated. That's definitely going to be part of today's discussion. But again, I'd like to lead off and just say there's no fundamental or mathematical explanation for why Bitcoin and stocks would be fundamentally correlated, aside from traditional investors operating on a traditional risk curve. And so when we think about asset markets in general, if we just diagnose a specific asset class or individual security as being a risk on or risk off asset, we can generally see how the changing environment in the yield market and in the bond market is impacting risk across the spectrum. So instead of saying that Bitcoin and stocks are positively correlated, we should rather and instead be saying that Bitcoin and stocks are equally inversely correlated to yields. So I just like to lead off by saying that. The chart that we're looking at here right off the bat is the Dow Jones Industrial Average using daily candles going back to January of 2020. And the reason why I'd like to highlight this is because we're seeing a classic rejection, breakout, and potential rebound area here on this recent retest. And so this is what I like to call a breakout, retest, and rebound setup. Again, in this environment, we don't know exactly how high the Dow Jones is going to rebound, but we do know that we are operating and trending within this parallel channel here that I've drawn on my chart, perfectly after retesting and rebounding on this former resistance and support range. And so as the Dow Jones starts to rally here, we need to be very cognizant of how the Dow Jones could retest this upper bound. And it's very possible we just see a continued ascension. Whoops, I had a different tool up. So that would be about a 5.2% rally through here. Or if we take a little bit more of a choppy path, retest this level once again, and then accelerate higher. It's obviously too early to tell, but we need to be very mindful of how the Dow Jones is ranging within this support and resistance channel. The other thing I'd like to say is, so long as the Dow Jones remains above this support and resistance range, I think investors could have a generally bullish or slightly optimistic view on risk assets. However, we need to note that we are producing lower lows and lower highs, which is creating this parallel channel. The production of lower lows and lower highs is the definition of a bear trend or a downward trending market. So overall, I think investors should be cautiously optimistic, as they typically should be in most environments, but be very cognizant of this general structure and framework that I have here on the chart. If we instead look at something like the Nasdaq and view a little bit more, move further out onto the risk curve, we can see some similar kind of dynamics. We have a clear support and resistance range. Again, we had that breakout over the resistance and then used it as support to rebound higher, used it as support to rebound higher. We've come back into this range, but now we've broken below it and consolidated around it. And I think investors should generally be worried about this structure. Again, this is not bullish structure. From the all-time highs in November, the index is down presently 28.1% and has fallen as much as 34%. That's worse than the drawdown that we experienced during the COVID crash. So this is clearly a risk-off environment where risk premium is very high right now. So we're seeing big swings in both directions. But I would like to point out, we did retest my base case perfectly, and I still have my worst case scenario drawn on here as well. But we retested that base case perfectly and have started to rebound exactly on that level. Now, the key thing to note is we have yet to retest this critical support and resistance range, which could again act as resistance. And even more similarly, we are moving within this white channel that I've drawn here. And it's not a perfect guideline for price, but it's been pretty damn accurate so far since we created it and formed it in the month of May. And so if we're looking specifically at short-term price action, I think this is a generally a good guideline for how we should be looking at price developments going forward. If we do start to see a sustained rollover here and break below that base case, I think a worst case scenario is still in line with what I've drawn here, basically around 9,500. So that's generally what we're seeing for risk assets in the broader market. In order to be bullish generally on risk assets, we'd want to see a breakout over this resistance trend line from the all-time highs. We have yet to see that yet, and in order to do so, we need to break above this support resistance range, we need to break above this range, and so we need to rally from today at least 15 to 16% if we were to do that in a straight line. Clearly, the more time goes on, the less we'll need to rally because of the nature of the descending trend line. We have a negative slope here, but still investors should be very cognizant that this is bear market structure. And so, generally speaking, this isn't a good sign for risk assets. I'd like to quickly look here at the price of Bitcoin compared with the Ishares expanded tech ETF. Why is this relationship so important? Well, we saw a clear correlation in the final leg and extension higher through the October and November highs. Both of these assets peaked specifically at the same exact time and started to roll over in perfect synchrony. Now, you can maybe nitpick and say that we've started to see a gap in the correlation here. However, directionally, they're still extremely correlated. And if we look at the 250-day correlation coefficient back when this correlation started in October, that's what gives us the 250-day measure, the correlation coefficient is about 95%. If we compare that correlation coefficient between Bitcoin and the S&P 500, it's 80%. If we compare Bitcoin versus the Nasdaq 100, I think it's 86%. And so, as far as I'm concerned, if we're looking at short to medium term correlations between Bitcoin and any other asset, we must be focused on the correlation between Bitcoin and IGV specifically, because mathematically that's the highest correlation that we're seeing. So this is extremely, extremely important. And as Bitcoin kind of comes into this environment, I think, let me really quickly here remove IGV. Well, actually, before we move IGV, let's really quickly just pull up the chart for IGV, because this is extremely important as we continue to make new lows and lower lows within this nasty descending channel. This is an extremely significant slope. If we just measure the percentage here of the slope, the angle is negative 42%. That is an extreme downtrend. Imagine falling at a 45-degree angle. That's essentially what we're doing here. And it's worked for both resistance and support along this entire way down since the highs in November. And so this has a lot of implications for the price of Bitcoin based on the correlation that we were just looking at. And clearly IGV hasn't come in to retest this range perfectly, but it is important to note, right, that this general area has been clear resistance, and it's going to be very difficult to be bullish on something like IGV and therefore Bitcoin if we continue to make lower lows and lower highs. And so really quick, I'd like to just briefly pull up some analysis that I shared earlier today, looking at the long-term trend of Bitcoin in weekly candles in logarithmic scale, and in the lower bound, I've drawn the 52-week Williams %R oscillator. And what we generally see here is a very strong and interesting trend, which is that bear markets tend to end when the Williams %R oscillator starts to have this rolling over to the upside, right, after becoming oversold. And so clearly, as we can see in the chart right now, Bitcoin is well within that oversold territory below the 80% threshold, but we have yet to see the production and rolling over that we've seen in prior bear markets. And that's clearly going to take some time. How much time, we don't yet know. But until we start to see that product, and I mean, you could really argue that back here in 2011 and 2012, we started to see a higher low in the Williams percent R oscillator. In the 2015 to 16 cycle, we started to see higher lows. In 2018-19, we started to see a higher low and that trend reversal here. Right now, we continue to make lower lows within this oversold threshold, which is indicative of to me that we're still within this overall bear market phase and have yet to see formal or constructive signs of a reversal to the upside. And this is something that I've talked a lot about, whether we're looking at the 12-month Williams percent R oscillator, the 52-week Williams percent R oscillator, or the 104-week Williams percent R oscillator. Why am I rattling off these specific random timestamps and time windows? Because they're either 1 year or 2 years in length. And I think if we're trying to look at the longer term trends for Bitcoin cycles, we need to really zoom out, get away from the 1 or the 2 hour candle charts, get out of the daily charts, and really look at the broader long-term trends here in order to try to identify reversals or confirmations in a specific trend. And so, I think I'm going to cap the video off here, but these are really some of the main things that I'm looking at right now that I think investors should have on their radar and should be paying acute attention to, because it has very strong implications broadly for risk markets. I think the final thing I'd actually like to mention is none of this conversation can be had without looking at yields. And this is something that I shared in last week's video and something that I even touched on in today's video, but the general setup and structure of a breakout, a retest, and a rebound. And that's exactly what we're seeing with 5-year treasuries. We had the 2018 highs, which acted as resistance. We came back, retested that same exact level earlier this year, back in May. It acted as resistance once again. We had a formal breakout here in June, and now we've come back in to retest this level, and we're starting to see a rebound. That is absolutely beautiful structure for 5-year treasury yields, and it's actually bullish structure for 5-year treasury yields. And as we know, if yields have tailwinds to rise, asset prices have headwinds to rise, meaning that they will likely fall, all else being equal. And so even if we look really quickly at 10-year treasury yields, we're seeing some similar structure, not quite as strong of a breakout, retest, and rebound setup, but still very, very similar. We had that same 2018 highs and resistance, a massive capitulation, massive rally, used it as resistance, sold off. We had a breakout, not super strong, but still significant. We've come right back into that range, and now we're starting to see a rebound. 10-year treasury yields up 2.75% today, whereas 5-year I think was up above 3% on the day. If we look really quickly at 30-year treasury yields, we have yet to see a breakout, right? We got rejected perfectly on those 2018 highs, a brief little cool-off period last week, but now we're starting to accelerate higher again today, up 2%. So if we zoom in a little bit here, let's just look at the trend. We got a beautiful wedge here, perfect breakout, and these have been on fire year to date. 30-year treasury yields up 75% year to date, and we're coming right back into those highs that we had earlier this year. This is again going to be a very critical retest, and should we see a formal breakout here, again, I expect that to put pressure on risk assets overall. So again, the trends, if we just look at the aggregate here, are pointing to, in my opinion, more headwinds for risk assets. The Dow Jones is looking the most attractive out of any of them, but continues to show bear market indications of lower lows, lower highs, retesting critical support. We've seen a brief rebound now, but starting to roll over. Again, that's this trend right here. Sorry, not starting to roll over. I think that's premature to say. But we don't know what path this is going to take. All we know is that we're trading at critical junctures. The Nasdaq also looks very bearish. IGV also looks very bearish. The raw price of Bitcoin has clearly shown us that we're in a bear market consolidation phase. This is not the time to become overzealous. Don't necessarily get too emotional with these potential head fakes that we're going to see. I've seen a lot of investors be too premature to say that the bear market is over after seeing the rally from 17.7 thousand back above 21,000. Expect heightened volatility during this period. We're going to see big swings in either direction. So be sure to create your own investment plan, whatever that may be, whatever your dollar cost average schedule may be, and stick to it. Don't get too overzealous here. That's something I've had to really remind myself of during these large swings. So stay very cognizant of what's happening in the yield market, what's happening with the Dow Jones and something like the Nasdaq and IGV in order to monitor broader risk trends that we could use to apply onto the price of Bitcoin and for our own investment strategies. With that, everybody, I hope everyone is well. Take care. Be sure to follow me on Twitter at Caleb Franzen. Sign up for my free newsletter on Substack, cubicanalytics.substack.com. I'll leave links in the description below. So look forward to seeing you there. Take care, everyone.